Hello traders and welcome to another video review. Today is Monday, the 8th of February 2021. Let's take a look at the Forex calendar first. As you can see, the Forex calendar is not really busy. There is nothing going on, virtually nothing is going on today on the financial markets. We got some data from the Japan Economy Watch survey that was better than expected. The economy watchers are convinced that the current sentiment is improving. Unemployment rate from Switzerland released at Q8 had been worse than expected. The unemployment rate had beat the expectations of 3.4%, and it's on the level of 3.5%, which is in line with the previous reading. So the unemployment rate is not falling in Switzerland. The industrial production data from Germany were released at the level at the 8 a.m. At the level of 0%. So it looks like the industrial production had fallen from 1.5% in the month of December to 0% in January, which is not good for the country like Germany. They even missed the forecast of 0.1%, which is not good at all. On a year-to-year basis, the industrial production in Germany is minus 1%, and right now this is a slight improvement from minus 2.5% at the end of the 2020, in December 2020. 10:30, the Centix investor confidence data to be released from the Eurozone, and as you can see, the previous reading was 1.3 points. The forecast is 4.1, so there is expectation of a investor confidence to accelerate quite significantly across the Eurozone. Well, we will see what the actual reading will be very soon. So I guess we should take a look at the technical analysis charts, because there isn't much, as you can see, important news on Monday at all. The first thing I would like to point out on our chart section is US dollar index daily time frame chart. As you can see, during the last leg, the C wave to the upside, the 38.20% of the Fibonacci retracement had been hit and violated, but on Friday we got this big red candle here, which means the bears are counter strike on this market again. So we have a bearish engulfing pattern on the daily time frame charts, which is not very good for the bulls, right? So right now the high of the wave A, which was located at the level of 90.92, has not been violated yet. But if it will be, then our alternative scenario that says instead of the ABC corrective pattern to the upside, there is a possibility of 1, 2, 3, 4, and 5 impulsive pattern to the upside, which would mean also the change in the general trend on the US dollar index is right now being very close to be invalidated. So it looks like we are going to have only 3 waves here: the wave A, wave B, and wave C. Let's just take a look at the current levels that this wave had been terminated. The high here was made at 90.57, and 100% of Fibonacci extension of wave A measured from the low of the wave B was at 91.74, which is a miss of around 16 points, which means pips, of course, and 16 pips away from the 1-to-1 very nice geometric ratio, Fibonacci geometric ratio, wave A to the wave C. Nevertheless, there is still possibility of another wave up to the towards the level of 91.74 to close the geometry, right? Or even towards 91.95 to hit the 50% of the Fibonacci retracement of the overall wave down, of course. So right now, please keep an eye on the current developments. If this bearish engulfing pattern will will be even more extended to the downside, and if 90.92 level, which is the high of the wave A, is clearly invalidated, so let's just switch it to the wave A, yeah, 90.92. Let me just put it on the coordinates. There you go. If this level is violated, then of course the acceleration towards the low of the wave B, which is 90.1, which is 90 points basically, will just get very, very quick. So that would also mean that ABC pattern is completed, and there is no chance virtually to make simple correction ABC towards 100 or 50% levels again on the US dollar index, which would mean, of course, that the dollar will be sold across the board as well. So that was the US dollar index. Let's take a look at silver. The silver market, as you can see, has hit our level. This is our target level of 30.13, which is of course the 100% of the Fibonacci extension of this wave measured from the low of this wave. So that's very nice. It was hit, so the targets are spot on. And then, as you can see, we got this supply zone. Supply zone hold the bullish pressure as well, because next day we got this nice bearish engulfing pattern and this very, very big candle down. That means also that the market has tested the level of technical support. We can actually a little bit update our chart. There you go. This is the level of $26. So $26 had been hit but not violated yet. We got nice down shadow and a bounce. So the question is whether we will go up again on the silver chart, or this is just a bounce, and then of course the bearish pressure will be continued. As you can see, the momentum is still positive, but it's not that strong. It's only 55, 56 points, so it's not that impressive. However, we are still trading above the $26 level, so please keep an eye on this level. This is the key level for today, and I think it might be even the key level for the rest of the week if the price will keep bouncing up and down from this level. Once violated, then we go straight down to $25, and then even towards the lows of the 18th of the January, which are at the level of 24.7 0.07. So very interesting situation on the silver. Nevertheless, it doesn't look like the long-term this uptrend since middle of the March 2020 is being continued, because we had been rejected once from this level, exactly the same zone. That now is the second time. So as soon as we will break below 25, 24, and then of course there is a key technical support zone, 23.48 and 21.84. So as long as the market is trading above this level, that's fine. We might consolidate for a little bit longer. But so far, the 28.85 and 29.80 zone, the supply zone, hasn't been violated, and it's being still attacked by the bulls. So right now we might be back towards the consolidation on the silver. So please keep an eye on the important levels. The last one, of course, will be spot gold market. Let's see what is going on here. So not a good news for all of the bulls on the spot gold market. As you can see from this point of view, we got the breakout below this short-term trend line here that once used to be tested very nicely, but the recent breakout below it had made a new local low. Let's just zoom in towards the point we are now. The local low has broken below 1,818, and the low was made at 1,784, which is right now, of course, our another key level in the short term, of course, and it looks like the market wants to test this short-term trend line from below, and then if the test will fail and market will return to the downtrend, the local downtrend, we will hit 50% of the Fibonacci retracement located at 1762. So please keep an eye on this market as well, and especially on this trend line here, because it's very important for the bulls right now to break above this short-term trend line. If they do it, then of course 1848, 1865 and 1875, those are the key technical resistance zones, including this high at 1875. Only if this level is violated, then we can say that the market is heading again towards the key supply zone here, located between the levels of 1992, 1965. As long as we are not trading back above the trend line, the market would likely test this trend line, consolidate, and then accelerate lower towards 50% of the Fibonacci retracement. So this is my outlook for the US dollar index, for the silver and for the gold for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.